Okay. All right. So, like I said, we're going to cover the tax resolution process. Let me give you an example of a situation that a lot of people are faced with. They're normally, coming to me non-compliant, didn't file all their taxes. It could be 2 years behind, it could be 5 years behind, and some I've seen 10 years behind. And when they're behind like that, I already know, if they're trying to get on a payment plan, the IRS typically or technically will not offer a payment plan until you file all of your taxes. That's step one. When you have a business, that presents a whole nother layer of an, challenge, meaning we got to get your business filed so we can get your personal done. Sometimes, depending on the client, depending on their, what they're doing, I might even say, well, let's see what the IRS actually have for you because some people may have a business, may not have a business. So it really depends on what we define as a business. And let's say like if they didn't really have anything filed on their personal social security number, they didn't even have an EIN number, but the IRS have like this little amounts here and there that was reported. I'm like, you're stressing out over nothing. I've seen that happen. And I'm like, we just need to file this 20,000 and just submit it. They're like just dragging their feet the whole time, and it's normal. So I find that a lot of times people are nervous about something that perhaps you don't even know what the IRS have on you. So one of the steps is that I would say, let's set up your online account. And I'm gonna show you what that looks like. Let me share my screen with you. And stop me if you have any questions. I welcome questions, okay? Because this is your process. So IRS.gov. A lot of people don't have an account. I find that this is something that people don't really go to. You'll check your bank account, you check, your social media accounts, but you just don't check your irs.gov account. And those of you that are in Maryland, Maryland is updating their system to be more like the IRS where you can look at your transcripts and all that stuff. So thankfully, some states are much better than Maryland. It just really depends on who it is. If you need an account, then you need to create an account. And what do you do here? Refund status, payments, tax records, notifications. And I'm telling you, some of this stuff can be resolved if you just submit a payment application, like a payment plan request. So if you create an account, we got to determine what kind of account you want or what kind of account you need. So in your many of your cases, you might have two, an individual account and a business account. And those of you that are filing married joint or married separate, you still have an account for yourself. So you can sign in or create an account. And then once you sign in, some of you already been here and you've already created your account, but you'll sign in with your ID.me. Okay. And that tells you everything you need to know about what you have with the IRS. Now, because the IRS is not, their systems are horrible, meaning the IRS is using old mainframe systems. And let me show you what I mean. So some of us want the IRS to move, we want them to move along a lot faster. Let me show you what I mean. So it says here, the Internal Revenue Service still relies on decades-old mainframe systems running legacy code like COBOL and assembler to process individual tax returns and manage taxpayer data. Now, isn't Now you would think with all the high technology that we have that they will be, very up on it. No, this is the federal government. They're so far behind. And why am I saying that to you? Because I want you to understand what we're dealing with, our challenges of working with the IRS, where even they, when I was on a call with this client a little while ago, the IRS agent said, sorry, my system is going really slow. And I'm like, here's another indication that he's using this old mainframe system, running these legacy codes that, it's just not processing fast. and they'll put you on a 5 to 7 minute hold because they know it's going to take a long time before they get a response out of that old system. If you need to create an account because you're like, I never had an account with the IRS, then you need to go through this process. And something I wanted to point out here, ID.me is a company based out of Tyson's Corner, Virginia. And I think they also have a location over in I'm gonna say location over in DC. So yeah, so this is Greensboro Drive. So they contracted this company. Y'all had me saying stuff. I don't even know if I should be talking about it. But anyway, I audited the IRS. And so you think about it, your information is going to be in ID.me, which is a third party system contractor working with the IRS to collect your data. And so ID.me is the name of the company. You're going to put your facial recognition, your driver's license, or whatever you're using to confirm your identification. And somehow their system talks to the IRS system. They're like the gatekeeper to, or the security guard, or the bouncer when you go to a club to check your identification before you get into your transcript. Okay. So once you go through the protocols here, then you gain access to your data. Does that make sense? So another reason why you should have an account, well, the IRS, definitely recommends it. But another reason, I got a client in North Carolina that called me today frantic because somebody tried to file her tax return. And she sent me the letter. I looked at it and I said, yeah, they want you to log in. The IRS wants you to log into here, ID.me, into your account to verify. And she said, I never had an account. I said, right. So now is your time to set up an account. The other thing is with an IRS.gov account to protect your tax return, because I've seen this happen. Somebody can steal your social security number, all your credentials, and file your return that you didn't even know that they filed it. And the IRS is not even going to tell you who filed your return or file the return with your information on it. They will not tell you that. So this becomes a fraud situation, but they do not disclose any information to you. And you're probably like, but this is my stuff. Yeah, but they don't tell you. So they encourage you to get a PIN number through this website. So if you don't have an account, set one up so you can select to get a PIN, which they encourage you to have one. So that way, when I file your taxes, I can't submit it without your PIN number. That PIN number comes out every year around November timeframe. So right now you can, you have if some of you already have one, it's good until October 15th or until whenever we file your taxes before they trigger to give you a new one for next year. So once they close the tax filing season, which is normally November, then you'll have a new one that needs to be used for any year. It doesn't matter what year that we filing taxes electronically. Of course, we can only go 3 years back, but starting next year, that new PIN number will be active starting January once they accept new returns. Okay. So everyone, I encourage you to get a PIN so you can protect your identification. And like this client, I told her, you want to check your credit report then. If somebody's trying to file your taxes, they may be, I don't know, but they may be trying to hit your credit as well. So that's one of the first things I would do in terms of, and we're talking tax compliance, tax resolution. The best way that we can work with you is if you have your stuff, you can pull your transcripts from here. I've had clients that told me, Donald, you've done more for me in the past hour than my last tax person. or Optum Tax or whoever they were working with because I'm trying to educate you and help you to understand how you can monitor your account. Something else that I realized, and I've been doing taxes for 30 years. I realized this, taxes were so much easier 20 years ago. That might sound like I'm old, but I'm telling you, it was so much easier. Now it's so much more difficult because, like I said, the IRS is using these old mainframes and it's not as easy anymore. But why do I say that? Because we are at a point now that we are basically submitting your file. I see that your taxes were accepted. I send you the notification that it's accepted. I can screenshot it, give you a document that shows your taxes were accepted. But then I realized the federal and the state, I don't care what state you're in, because I have clients in North Carolina. Hey, Bishop Charles, thank you for joining. Between the federal and state, it would show that it was accepted on my end, but it does not mean that the IRS or the state processed it. That right there made me upset because I said, you guys are really making this difficult. I'm thinking that you processed the return and you didn't process anything. So I had one client, literally, we had the IRS on the phone several times. They promised that they were not going to do anything. They weren't going to levy her account or anything. They levied her paycheck. So when we're dealing with this stuff, it's like they're not holding up to their end of the bargain of these discussions. The problem in her case, I bring her up because we did an amendment, we submitted it, but they never accepted it. So as much as I can try to stay away from an amendment, I try to, but I don't mind doing amendments, but I hate amendments because I have people that the IRS have not processed their file over a year.
Mm, mm, mm.
It's ridiculous. And they sit on it. And I'm like, what is going on at the IRS that you're holding on to a file? I don't have an explanation. I don't know. But now I didn't even get into the business side of doing this. So this is just the individual side that we're challenged with. So this is not 20 years ago. Because if it was 20 years ago, my experience with the IRS was much faster, much more efficient.
ten
It
dollar
was that,
box, $10 special.
Derek, did you say something to me? Okay, I'll put them on. Yeah, so it has gotten, very challenging dealing with the IRS. So when we dealing with tax compliance, tax resolution services, there's a bit of homework that we got to do. So I told my client I just got off the phone with before this call, I said, you got to give me 2025. You're compliant because we filed an extension. But if you owe anything for 2025, we want to put it on top of everything else. So he owes $85,000 right now to the IRS, and he's an older gentleman. I want to say he's probably like in his later 60s, and he's frantic talking to them. So that's part of the challenge. So we are pulling your transcripts, we're pulling your income during that period so we can understand what exactly do you owe, and what taxes need to be filed so we can get you compliant. Then what I would do is build a compliance checklist, identify all the unfiled years, because think of it like this. If I'm dealing with 20 people, somebody might be missing 2015. Somebody else might be missing 2022. So I build a checklist to help me identify all the unfiled years and determine the collection status. Are they currently collecting? How much the balance is? Are you currently under an agreement? Did you get a notice, a levy or lien? Let me ask this question while we're on here. Do you all understand what a difference between a levy and a lien is? And somebody please answer. I want somebody to answer this question. What's the difference between levy and a lien.
I'll take a guess.
Yeah, sure. Thank you.
I'm thinking a levy is something that the IRS that is, puts on your account with the expectation this is what we're going to get. A lien is something that almost the same thing, but they just freeze up other stuff.
That's a good way to put it. That's pretty much street language.
Yeah,
That's exactly
yeah.
what's happening. Anybody else want to take a stab at that? Come on, come on,
Okay,
somebody
so
got it.
hey, Donald. So I
Okay.
agree with what the gentleman just said. I feel like the lien is for them to place a hold on your stuff just in case they have to collect their money.
Hmm.
And the levy is when they are actually taking your money out of your. So that's kind of how I see it.
That's exactly right. So you see how both answers are pretty much similar in that regards, but that's exactly what happens. So they'll take your money, they'll levy your bank account, they'll take the money. The lien is if they put a lien on your property, basically they're saying, "Hey, we taking your assets before you sell it. We want our part." And people get frantic when they get this letter. But it had to, it takes time to get there, but once you've gotten to that point, it becomes serious. That's when people start waking up. And the IRS knows it. They technically don't want your stuff. They technically do not want your house. What they gonna do with your house? What is the IRS gonna do with your house? Nothing. But they have to do something to trigger you to pay them. They going extreme measures to get you to pay them. So when you get this letter that says, "Hey, we're going to levy lien," people get up, they're, really upset. And I hear it. I feel the anger, the frustration, just all the thing, worry, every emotion that could possibly come out. So I want to see those letters. Then what we would do is let's let's figure out where we are concerning these matters. We'll do an analysis of your income, your expenses, your assets, your liabilities, and come up with what they call a reasonable collection potential. Basically, this is part of the resolution process because we can't just tell the IRS you don't have the money to pay. But we can tell the IRS based on how much I make, based on all my living expenses, based on my assets, my liabilities, this is how much I can pay. Now, if your 401k, your TSP, your Roth, if you're loaded with money, yes, they might say, "I want your money." Or they might say, "See if you can get a loan." But this is where working with your accountant is very important because, like, for example, when I told the gentleman, and you all noticed, those of you that were a part of the meetings earlier this year when I had IRS agents on here, and they said, do not call the IRS without your accountant. So what I did is I talked to the IRS on behalf of the client a little while ago, and I told the IRS agent, I said, walk my client through the tax resolution process, starting with this financial statement. And the IRS agent started going through it. He said, yes, your accountant is telling you this is the process that we would go through. Otherwise, typically the IRS agent cannot, they cannot disclose to you what your the technical rights that you have rights. They'll say you have rights, but they're not going to give you all of the tools that you need to know to walk through this process because the IRS agent, could lose their job. So, getting compliant. We want to file all your missing returns. And again, the IRS generally will not negotiate with a non-compliant taxpayer. So if you're not compliant, they're not going to make any kind of arrangements with you. And also, if there were problems with paying in the past, that's okay. We'll work on getting everything caught up. And but our resolution strategy based on your financials, we would determine the best fit. If you better off with an installment agreement, so like I was saying about logging into the IRS website, and I'll go back here just so you can remember. If you go into their website, you sign in and say like you're all caught up, all your files are done, and maybe you owe 20,000, which is, not that bad, but you could go in here and just set up a payment arrangement, and then they would approve it. So one of my clients, she's not on here, but I hope she watched the recordings. I'm gonna tell her to watch the recording. She called me up. She was like, Donald, she was so sad. I'm laughing because I can hear her tone in my head now. And I said, I'm coming to your office. And I said, did you set up a payment plan? She said, Donald, I don't know what I'm doing. I didn't do anything. I said, all right, look, log in, because she has a login. I said, set up a payment plan. And she said, that's all I had to do. I said, yes, just set up a payment plan, please. Stop the bleeding. Set up a payment plan. That way you won't get any more threatening letters. And so they were like, she was okay. She was much better at that point. But it's just that simple. And it may not seem like, it's that easy, but many times it is. It's that easy that you can just set up a payment plan. So, but that's if you on a reasonable or if you have a reasonable balance that you owe instead of this high balance, like my last client that I talked to, up at 80,000, I've had people that are 100,000. And as long as you don't have a balance that high, because the IRS will not, they will not make a payment arrangement of anything over 50,000. Nothing over 50,000. So anything above 50,000, they will not make a payment arrangement. So that installment agreement will not happen. The other thing is offering compromise. If we've gone through the financial analysis with them, in the exact form, let me tell you what the form is, and I'm gonna show it to you because I gotta. So this is a 433F form. I'm gonna show you what it looks like. And remember, those places, ignore these calls if you have any. Let me ask this question while we're on here. Do y'all get those calls from them companies talking about the IRS tax relief? Do you ever get those calls? Anybody got it? Don't all speak at once. Did anybody ever get a call about tax relief?
No, I haven't.
Thank you for that.
Yes, I have.
Derek, you have? Yeah. So I've had a call before. It's funny, I told them I'm licensed. I said, do not call me again.
And lots of emails.
And lots of emails, yes. Because your tax debt becomes public notice. People learn about your tax debt, and companies like Optima Tax, whatever, will basically come after you to see if they can work with you, and they would charge a lot of money. And it's interesting because it's like I tell people, it's like working with McDonald's with those people. You're going to get somebody that is not even an English speaking person. So I think they have people offshore that's working for the company, and they're putting, it's a big thing, and they charge a lot of money. So what I'm sharing with you is something that basically you need to know um, what this looks like so you don't have to go through the process of working with a company like that. You're working with me. So this is a 433F form, and I'm trying to pull up the actual form, and it's like Why can't I see the actual form? See, even the IRS don't want you to see this form. Okay, get the form. Jeez. They be having this thing on lock because they don't want nobody to know about it. And you see it says Internal Revenue Service. You pull up 1040, that automatically come up. But you pull up 433-F form, it's like going on a goose chase trying to find it. But this basically is the information that the IRS wants from you. Let's say you're like, Donald, I don't really have this problem. But if you owe money, a lot of people owe money. Maybe you still don't want to make the monthly payment that they put you on. This is something that we will have to do. Get your social security number, all that type of stuff, the basic stuff in the first box. When you get to section A here, accounts, lines of credit, it says here they want personal bank accounts, checking, savings, PayPal, Cash App, money market accounts. They want to know if you have investments, and we have to include stuff on separate pages because if you have multiple accounts that just don't fit here, we can always add more. They even want to know if you have digital assets like Bitcoin, that type of stuff. Real estate. Do you have, is your name on the property? Don't tell them about a property that doesn't is not your name is not on. That's not gonna work. But real estate investment in real estate property like homes, vacation homes, timeshares, they even want to know if you have vacant land because they might try to take that. Other assets, cars, boats, all the details they want here, monthly payment, year purchase, final payment, month and year, current value. They want a lot of details. Credit cards. You get the point. Business information. Do you have a business? They want your business account, credit cards, all that type of stuff. Employment information. If you aren't an employee, um, if you're married, they want to know your spouse information. Non-wage household income, alimony, child support, unemployment. They want to know your personal expenditures, living expenses. Once you've gone through this form, you're probably like, oh my God, I was not ever this organized. Some of you. But those of you that are organized, you probably already have this stuff documented, and it's rather easy just to move it onto here. But the IRS, like they told my client, they need this in the next 5 days because the fifth day is on the weekend. He moved it till next Tuesday. So what happened is this process is I will call them, and guess what? Hold on, let me tell y'all something. Let me tell y'all something. This is how the IRS is. If I call the collections number, because you can't just call 1-800 IRS. That's not going to work. They have different departments. I call the collections department. And when someone has an issue, I'm like, look, I've been doing this for years. I know who to call. Either you're going to follow my directions or not. Either you're going to trust me or not. So I already know to call collections. I told the gentleman on the phone, if you're giving us to next Tuesday, and I've been calling you guys every day so far, it's been since last week. I've been calling them for my one client, and we've been calling every day. Today we called. She's a federal employee. They have hung up the phone on her every time. So I said, if I don't get through, you're giving us till next week. What am I going to do if I can't get a hold of you? Because your lines are tied up. He said, oh, let me give you the other line you can call. Oh, y'all got another number? Why don't you tell me? Why don't y'all tell people this stuff? So there's another number I'm gonna call. So they have different ways of you getting access to them. So it's a lot. Before I keep going, is this very helpful to you?
Yes, sir.
Good.
Yes, sir.
Perfect.
Yes.
The other thing
Yes.
is, it's called abatement. Have you all ever heard of penalty abatement? Have you ever heard of penalty abatement?
Yes, I have.
You want to share your experience with penalty abatement or your definition of it? Take a stab at it.
Of course, you're gonna ask me that question. um, um, I think my understanding of it is that they can wipe out a percentage of the penalty, but it's only, I believe, within like the last 3 or 4 current years. Like it's not, you can't go if you owe like a whole lot of tax years, they only do it for a couple of years back. Am I correct?
Mhm. Well, it
Kinda.
depends on what exactly it is. So, like, they do a penalty abatement typically first time, and they also will do it for reasonable cause. So it depends on whatever that looks like. And oh, that was you that said yes. Okay, so look, I'm going to share with you my screen about penalty abatement. And it's okay. Listen, y'all, everybody trying to learn this stuff, so if you don't know the answer, it's okay. You can say, look, I don't know, Donald. This is all new to me. They don't teach us this in school, right? So, but this is something they do. IRS provides penalty relief through administrative waivers like the transitional first time abate, new automatic exemption from penalty program, or factual arguments based on reasonable cause. So this is what happens. If you're late on your tax filing, for example, and if we can get the penalty abated because it's a first time situation, they'll abate the penalty. Let's not do it again. But let's say it happens again. What would be a reasonable cause that they will abate the penalty? Death in your family, you were sick. There are different reasons. So I can't just give you one concrete reason, like this is the only way to abate it, because there's different reasons why. Let's say you had poor direction from a tax preparer and the tax preparer did not guide you right. That could be a reason to abate the penalty. So there's different reasons to abate penalties. So sometimes your balance includes penalties. And so we could do a abatement. We can request an abatement of those penalties and bring your balance down. In other words, what are we talking about? I don't want you to put your head in the sand because, like this one client, I'm like, you see how this process is not hard. It's just that when life happens, yes, it can get a little stressful trying to deal with taxes and you got regular life going on and you're getting notices from the IRS. We're already triggered emotionally to be stressed when we see a letter from the IRS.
Donald, I have a question.
Sure.
Okay, so my I guess my question is the abatement though, is it on all the years? Because I was told it's only for like current years, meaning you can't go back so far.
That's where the like if you talk to the IRS agent, they may not be able to tell you all that you could do. But if there is something that, let's say from 2022, because it could be, to your point, the statute of limitations. If it's a 2020 issue, yes, because the statute of limitations will exist and you can't go back that far. But if it's a more recent issue, like the 2021, 2022 time frame, that likely can be a circumstance that could be abated. But it's first time and also reasonable cause. And if we can justify reasonable cause, let's say I told, I hate doing it this way because I'm like, look, we all are professionals. We all trying to make money. We all trying to do business, whatever. But if that last tax person misguided you, unfortunately, that can abate the penalty if you tell the IRS agent that this is what occurred with this particular tax person. And if they find that that person misguided you, you have just cause. they could abate the penalty. Because what is it? You're relying on us to be professionals to give you guidance. And if you're not getting guided properly, and you did not get the information you needed, then that could be a reasonable cause to say, hey, he did not guide me properly. I've even done that for somebody where I told them, like, look, we had a misunderstanding, and I'll take the issue. It's not so much that the IRS is going to crucify me, but if that's going to help you get off this penalty because there was a misunderstanding, I thought we understood and we didn't. So therefore, I led you down the wrong path. And I'll give you an example of that. Let's say, for example, I you know, I thought that you already filed your 2023 tax return. Do you say I did? I'm like, all right, well, we can skip that year. We'll go to 2024 and keep moving forward. That could be me guiding you. I should have gone through more, what is it called? More quality control, more questions, and saying, which I do now, especially, let's pull your transcript. Let's call the IRS. So sometimes well, a lot of times I go the extra step because one, I'm an auditor, so I know I'll dig a little deeper than the average person. So I'll say, let's call the IRS, especially when it comes to business. And I'm like, people don't keep their EIN letter. I need to know how we should file taxes for your business. I already know for you personally, you're an individual, 1040. But for business, I need to understand how we need to file it. So I would call the IRS. So I would do all I can, that due diligence, to make sure I've done my homework to know what should be done. So that's the abating the penalty. But that was good. Thank you, Sandra, for that question. So then we would submit the form that I showed you, the financial form for the IRS to approve what you say that you can pay. If you say I can only pay $50, that's all you can pay. If all you can pay is $100, that's all you can pay. It's just that we have to go these extra steps. Also, there's something called innocent spouse relief. And say, like, I'm not with that spouse anymore. We owed that tax when we were together, but for whatever reason, I don't owe it. It's that other person. You can file innocent spouse relief to see if they will take the bill off of your Social Security number. We also need to make sure everything's get tracked. So I would say, look, let's make sure everything you're getting from the IRS, that we are getting that and answering the mailings, all that kind of stuff, just so we can make sure that we are going about this in a proper direction. If we need to go taxpayer advocate service, there's always that option too, where we will basically classify it as a hardship situation, that we just haven't broken through the IRS, we haven't convinced them. But also, before I continue, there's also what they call offering compromise. If you haven't heard of offering compromise, I'll show you what the terminology so you can understand it. But offering compromise is like the next layer to this of getting your taxes reduced. So offering compromise is if you basically saying, hey, I want to settle on the debt. I want to settle on the debt. I don't have the money to pay the IRS. And this is what it says. You see that? It says, allows you to settle your debt for less than the full amount you owe. It may be a legitimate option if you can't pay your full tax liability or doing so creates a financial hardship. We consider your unique set of facts and circumstances, ability to pay, your income, expenses, asset equity. So in that case, using my older client, for example, he is in his older age. He has a bill from 2016. The IRS agent said there's a likelihood that 2016 might fall under the category of being able to settle it under the offering compromise. Isn't that amazing? I'm happy to hear that because I'm like, sir, don't be stressed out about this 85,000. as much as we can knock this off with your financial statement, as well as offering compromise, I'll be surprised if you owe more than 10,000.
Donald,
So,
sorry.
no, go ahead.
So, is it true that the IRS only goes back 10 years? And if it's 10 years old, I'm just asking because I know people who have taxes beyond 10 years that it drops off.
It does drop off. And I'll show
So,
you
in
what I mean.
likelihood, because it's 2020, 2016, and we're in 2026, his could drop off, correct? Or no?
I want to make sure I answer this in the right way. So this is what we have. So I use 2012 as an example. It can drop off and become uncollectible after 10 years, but only if the 10-year collection clock was never paused or extended.
I knew it was a twist to it.
It's always a twist. That's why I say
Me too.
I
I'm
have to
like,
always make
there's a
sure.
catch.
And I think for him, the client 2016, it's almost as if he shouldn't say nothing. Because if he get it, the problem is it's about battling between the levy and the lien in this period. Because if you got the 10 years, it's almost like you got there by a miracle if the IRS did not levy your account. And he started getting levy notices, and it's probably because they know he's coming up on that 10-year mark for some of his debt. But it says once the 10-year period ends, the IRS must legally write off the debt, stop all levies or wage garnishments, and release active tax liens. I don't know if the CIA is on here, but this country not all trash, okay? So the government does have some favor towards the people a little bit. Okay, are there any questions before I keep going? Okay, so as part of me working with you all, of course, the thing is we got to make sure we stay on top of it. Um, be diligent in handling the matters so that way you're not caught, not being compliant. Like I can't monitor you like that as like I'm not hired to be your personal assistant, but if you are falling short, you should notify me and say, "Hey, Donald, I don't think I can make this next monthly payment." Let me know so we can get on top of it as soon as possible. Don't play, you know, like it's going to disappear. I don't want you to fall, you have a team. You can feel free to say, "Hey, I need help." And we can deal with the IRS. I can call them and I can tell them, "Stop collection efforts. We need a little bit more time," versus ignoring it. Okay. So that gives you some kind of understanding. Now, if I can talk to you from a business owner standpoint, all of you business owners, entrepreneurs, I would ask you, how much money do you want to owe the IRS? Let me ask that question. How much do you want to owe the IRS in any given tax year? You're a business owner. How much do you want to owe?
Zero.
That's the answer. Zero. Cherry, she says zero. Absolutely. You have that option. And the IRS, the tax system is voluntary. Do y'all know that? That the tax system is voluntary? And what do I mean voluntary? They allow you to voluntarily report your income. Muhammad said nada. They allow you to voluntarily report your income. So structure your finances. Structure your finances in a way that you won't owe money. So let's say, like, for example, and I'll get into more tax strategy as we approaching the end of the year because I want to make sure that you have your books, that you're ready for the end of 2026 before that happens. But let me give you an example. You being a business owner, your business can put money into a retirement account. And I just talked to someone earlier today to confirm it. It's about 70,000. So in other words, why would I want to pay the IRS $30,000? That's outrageous. And not put that into my retirement account or not pay myself as an employee of my company or pay my child if I have a child, hire somebody. In other words, being in business, you gotta pay money to run a business. You gotta pay somebody because if you're gonna hold on to money in your business, you're going to pay the IRS. And if you're in a state that you're paying state taxes, you're also going to pay the state as well. And your tax bill is going to be a lot of money. And then if you don't pay by April 15th, you're charged penalties and interest on the balance. You would think, why am I being charged a penalty if, I didn't file my taxes yet? Because the IRS has that you're supposed to pay your bill April 15th. And for my business owners out there, I'll say this. I would not rush to pay them just because. Because think about it. As a business owner, they stress us out in the beginning of the year because they want your tax file. Let me have a chance to look at my deductions. Let me have a chance to see what I can write off before I just submit this because I could be cheating myself out of some money. I'm paying you $10,000, but if I can reduce that balance to 2,000, that's better than 10,000 because let me tell you something, the IRS will not give you that money quickly. I have a client right now who his accountant told him to pay the IRS a lump sum estimate amount, and it was like 40 grand. The IRS has held his 40 grand for the past at least 5 years. And we had to go through some other things to make sure his filings were done and all that stuff. But right now, the IRS has a credit for him of $40,000. Y'all probably saying, I wish that was me. You wouldn't want to be on the other side of the fence submitting 40,000 and them holding it. So I would not rush to pay them a bunch of money and expect them to give you that money back. They're not going to give you that money back quickly. It may take some time. So as a business owner, that could be part of your stress. Like, I owe this money and it's due April 15th. Donald, what am I going to do? First of all, let's calm the stress down and let's strategize. You can't strategize being stressed unless you're one of those high functioning people that just you operate on stress. Some people do. But no, we're not going to be stressed about it. We need to strategize. We need to lower your bill. And it could be more if we did not lower your bill, but we're going to lower your bill and we're going to focus on how we can keep it low. And because the IRS gives you that advantage. So you being a business owner have that advantage. Why? Because as an employee, if you're a W-2, they can already see what your income is. But as a business owner, they don't know what your income is if you're getting paid under your EIN number. So they allow you to write off business expenses to bring down your tax liability. So business owner versus employee or versus your individual tax filing, you don't have to be stuck with the high tax bill as a business owner. And it all depends on how we file taxes for the business. So that concludes this part of the presentation now, we'll say before I shift and turn off the recording. If you all need help with implementing AI in your business or leveraging AI tools for your business, I'll touch on that next meeting, like automation and all that kind of stuff. Some people love my AI agent that's answering my phone. Some people hate it, but I tell people I get tons of calls a day, and it's hard to manage. Imagine being at your desk at your workplace and you're trying to focus on your work and you're getting calls here, calls there, texts here, texts there, emails here, emails there, requests, requests, requests all day. And the only time you get a chance to really work is at night. That can be very challenging. So yeah, so I'll touch on that next time to help you to automate things, even when it comes down to advertising your business on social media. If you also are interested in the minority business enterprise for the state of Maryland because you want to set yourself up. Now, Sandra here, she's already MBE for the state of Maryland. She can talk about the benefits of being that, but there are opportunities in the state of Maryland that you can, and even other states. So Bishop Charles Brooks is in North Carolina. So there are things that you can be within your state to get access to certain types of contracts. So that's something we'll go over as well. And because maybe that's something you're interested in. So we want to go over some things that will really help you to expand and grow your business. So that's very helpful. We'll talk about that next time. But that concludes the presentation here. I'm stopping the recording. And are you sure you want to